You've probably heard the news talking about a softening or cooling housing market. But let's be real. In parts of California, what's happening is way more intense than that. We're talking about a major market reset that's hitting some specific cities really, really hard. And today, we're going to count down the 7 cities that are most vulnerable.
For what felt like forever, the story of California real estate was just a one-way street, right? Straight up. Well, that party is officially over. The absolute frenzy we saw, fueled by those crazy low interest rates and the pandemic-driven demand, it's been replaced by a lot of fear and a whole lot of uncertainty for both buyers and for sellers. So let's be super clear about something. This isn't just some gentle cooling. We're talking about a correction. And what that means is a significant, and for a lot of homeowners, a really painful price drop that's already happening in key communities all across the state.
I mean, the market has completely flipped. It's like night and day. That old world of insane bidding wars and desperate buyers offering anything, it's just gone. Today's market, it's all about price reductions, inventory that's piling up, and, for the first time in a very long time, buyers actually have some real power.
Okay, so our first 2 cities on the list are dealing with what I'd call a classic pandemic hangover. They just saw this massive, totally unsustainable boom, and now they're facing the inevitable reversal.
Kicking off our list at number 7, we've got Riverside. This spot in the Inland Empire was an absolute magnet for people trying to escape the sky-high costs of LA and Orange County, and that flood of demand sent prices through the roof. But now, the very things that made it boom are making it really vulnerable to this correction.
And the numbers, they tell the whole story. Just look at this. Homes in Riverside are now sitting on the market for an average of 63 days. Last year, it was just 32. That's not a small jump, it's nearly double. And what that means is buyers have way more choices, a lot more time, and a ton more negotiating power. The power has definitely shifted.
All right, coming in at number 6 is Sacramento. For a little while there, California's capital was one of the hottest markets in the entire country. You had this huge exodus of tech workers from the Bay Area looking for bigger, cheaper homes, and you know what that did. It created a bubble that is now, it's starting to pop.
And for Sacramento, it's a real double whammy. Get this, after years of double-digit gains, home values are now down 3.3% compared to last year. At the same time, the number of homes for sale has just exploded by 44%. It's a textbook case of more supply and way less demand, and that's putting some serious downward pressure on prices.
So now, let's head over to the coastal markets. And this is where things get really, really surprising. I mean, for decades, it seemed like these super high-value cities just defied gravity. But guess what? The shockwave of this correction is now hitting them too. Coming in at number 5, Orange County. The OC always felt like this impenetrable fortress of desirability, right? But even that fortress is starting to show some serious cracks. The just crushing weight of unaffordability is finally taking its toll, and it's tipping the market toward buyers for the first time in what feels like forever.
Next up at number 4, the massive, sprawling giant Los Angeles. Now, the county-wide price averages can kind of trick you, but make no mistake about it, a correction is absolutely underway here. All you have to do is look at the sales volume. It is tanked by a pretty staggering 12.3% compared to last year. Buyers are just backing away.
And if you want a clear sign of just how much stress there is in the LA market, check this out. Some of the new construction builders are stuck with way too many unsold homes, and they are getting desperate. They're offering these massive incentives, sometimes as high as $200,000. Imagine trying to sell your regular home when you're competing with that.
At number 3, we have San Diego. America's finest city, right? With its perfect weather and booming economy, it really felt like prices there could only go one way, up. But turns out, even paradise isn't immune. San Diego's housing market is now cooling off, and it is happening incredibly fast.
So, what's the most dramatic sign of this big shift? A 44% explosion in inventory. This sudden flood of homes for sale gives buyers thousands of new options and just immense negotiating power. That's something that was basically unheard of just a year ago in that market.
Okay, now we're heading north to the Bay Area, the absolute epicenter of the tech-driven boom. And now, it's the epicenter of the correction. Our final 2 cities are the most vulnerable in the entire state. This is where it gets really intense. Our runner-up at number 2 is Oakland. For a long time, it was seen as the more affordable alternative to San Francisco, and it had its own massive price surge. But now, with the entire Bay Area economy kind of sputtering, Oakland is in a full-blown correction. We're talking prices already in a steep double-digit slide.
The numbers here are they're shocking. Oakland home prices are down a massive 15.2% compared to this time last year. This isn't some forecast or a tiny dip. This is a severe price crash happening right now.
And that brings us to number 1, San Francisco. It's probably not a huge surprise to anyone, but the severity of what's happening there is just stunning. The tech industry that powered its unbelievable rise is now sputtering. We're seeing layoffs, a big shift away from remote work, and those ripple effects are creating a housing correction of truly historic proportions.
The citywide averages show a drop, but they really hide the true damage. This here is a specific, and frankly, a gut-wrenching example. There are condos that were valued at $1.8 million just a few years ago that are now estimated to be worth around $1.2 million. That is a 30% drop. We're talking about hundreds of thousands of dollars in lost equity.
So, there you have it. From the pandemic boomtowns to the coastal giants, a really clear pattern is emerging. So let's pull all this together and talk about what this new reality actually means for you, whether you're thinking about buying, selling, or just watching from the sidelines.
What we're seeing is basically a perfect storm. It's this nasty cocktail of 3 different factors hitting these local markets. You've got skyrocketing inventory, so more houses for sale. You have collapsing buyer demand. And you have these stubbornly high mortgage rates that are just keeping people out of the market. This combination is the new reality on the ground.
And look, if you take one thing away from all of this, let it be this. The days of easy statewide appreciation, where you could buy almost anywhere in California and watch its value climb, those days are over. The California housing market has fractured. And now, more than ever, you just can't rely on the national headlines. Real estate is local, and the specific dynamics of your zip code are the only thing that really matters.
And all of this brings us to a final, really big question. For decades, owning a piece of property was the bedrock of the California dream. But in today's fractured, unpredictable market, what does that dream even look like anymore?